Michael Saylor is now explaining exactly how you can multiply your money 100-fold with Bitcoin. What he's saying here is insane. I mean, most people assume that in the next 3 or 4 years, you might be able to make a 5x, maybe a 10x, or something like that, but definitely not 100x. And now he's talking about how you can actually achieve 100x with Bitcoin even in the short term, say, within a 5 to 10 year time frame. As the Vec describes here, he's laying out the game plan for how any random person could make $100 million with Bitcoin. But I also want to be completely honest with you. I'm not here to sell you something like those crypto YouTubers who say, hey, guaranteed risk-free returns, just go in with 100x leverage, no risk at all. No, you have to be aware that there is a certain amount of risk involved here. We'll take a look at that in a moment. It's also really important. He explains how this is possible not just for institutional investors, but for any average Joe out there. Someone who doesn't own a company, just a regular employee somewhere. And of course, I don't mean that in a negative or disrespectful way. But the reality is, not everyone can have a company like Strategy or something. I mean, I don't have a treasury company or anything like that either. And he simply explains how any regular guy, whether you're self-employed, have some kind of cash flow, are a salaried employee, or get your money from rent or whatever. How? Basically anyone can turn their money into 100 times more here and potentially make hundreds of millions in Bitcoin. If you want to catch that 100x with Bitcoin, then go ahead and hit the like button below so YouTube pushes these videos more. Smash the subscribe button if you haven't already, so we can really get these videos out to the masses. And people can see what's going on here. And of course, if you want to multiply your money by 100, then hit the like button. Otherwise, don't hit the like button. But yeah, this was all over at Natalie Brunell. Let's take a look. And very important, everything here is no financial advice, not financial consulting.
You've said that if you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, then buy Bitcoin with someone else's money and lever it. But for the average person watching who's probably a wage earner and not a business leader, what do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
So, just to clarify again, Natalie Brunell is asking here, how can you make 100x? And as her opening statement, she basically quotes Saylor. If you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with other people's money. If you want to 1000x your money, buy Bitcoin with other people's money and leverage it. And now the question is, how can any regular person just make 100x here? Oh, check this out. My cat just showed up. Are you bullish too? People have already asked about it in the comments. They want me to ask you if you're currently bullish. How bullish are you? 100x, 1000x, or 10,000x? So she says that 100x is definitely possible. Go ahead and drop a like for the super bullish Bitcoin cat.
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep a job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead.
So whoever understands this here has really grasped the secret behind Bitcoin, right? And what Michael Saylor is saying here is really not some kind of space science or anything like that. But it's still fascinating because he always says you shouldn't do anything reckless. You should just trust in your own expertise. That means, for example, if you sell shoes, then sell shoes. If you, sell trampolines, then sell trampolines. And if you do something else, like provide IT services, then do IT services. Just try to improve your salary. If you can, try going to your boss. Ask for a raise. Just try to keep educating yourself. Also try, this is something I always tell people, don't just trade your time for money, but try to build a scalable business where you're not dependent on your time, but where you can basically create a bigger leverage, independent of your time. That would, of course, be the ideal. But even if you don't have that, even if you're an employee, you just have to make the most of it. You have your salary. You put some savings aside, 30% savings rate, 40%, 50%. Of course, the more, the better. And then it gets really interesting. By 2045, Bitcoin will reach 13 million. That means every Bitcoin you don't buy now will cost you 13 million. That's the concept of opportunity cost. You can only spend your money once. For example, if you earn 10,000 US dollars, or let's say you have a savings rate of 100,000 US dollars per year, that's what you can save if you don't put those 100,000 US dollars into Bitcoin. It's not just that you're missing out on an opportunity. Instead, over a 20-year period, you're basically putting 13 million on the line. That means blowing those 100,000 US dollars at a fair somewhere instead of putting them into Bitcoin has cost you 13 million in the long run. Because you had the 100,000, you could have put it into Bitcoin, but you didn't. You prefer to spend it all drinking at Oktoberfest. I mean, you can do that too. Go to Oktoberfest, knock back a few beers for all I care. But just don't do it with 100% of your money. Do it with 0.5% of your money or something like that. Keep a good balance. And then this guy says, now you can buy the Ferrari. But if you buy the Ferrari right now, it'll cost you 6 Bitcoin. That's 600,000 US dollars. In 2045, the price of Bitcoin will be several million. So if you buy a Ferrari now, it doesn't cost you 6 Bitcoin, but the Ferrari will end up costing you hundreds of millions, or over 100 million, because the price of Bitcoin will be at 13 million. And once you understand that, it really changes a lot. And Michael Saylor would also be a good friend who says, okay, you can have a Ferrari, but don't get the Ferrari by selling your Bitcoin. Instead, use your Bitcoin as collateral, take out a loan against them for fiat money. So, you don't sell your Bitcoin, get your Ferrari, and then pay off the loan gradually with the gains from the price increases. But only do it if the Ferrari is proportionate to your overall wealth. There's also a saying I really like. For example, if you can't afford to buy something 10 or 20 times over, then don't buy it. For example, if your total assets are 200,000 and the Ferrari costs 10,000, then you have about 20 times the value, and you're buying the Ferrari with just 1/20th of your wealth. In that case, you could say, okay, that's a good ratio. But if you have 200,000 and you buy the Ferrari for 600,000, then the expense just isn't in proportion to your portfolio. That's why a Ferrari would simply be out of your league, and you have to put your ego aside and not force yourself to buy a Ferrari just to boost your ego. That just doesn't make any sense, especially when you have Bitcoin and those huge opportunity costs that you always have to fight against.
And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage or 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So
he then goes on to say, get yourself a. By that he means mortgage interest, a mortgage loan. So basically, just use your house as collateral. You just have to keep in mind, okay, this doesn't work if you haven't paid off your house, but there are a lot of people who, for example, have paid off their house and don't have any debt on it anymore. In our current system, that's actually kind of dumb. So, as soon as you paid off your house, you basically use your house as collateral again. Or you can even use your house as collateral partially, even if it's not fully paid off yet. For example, if you paid off 50% of it, you can use that 50% you've already paid off to take out new loans. And now, basically, the new loan isn't being used as collateral to buy the house anymore, since you've already paid off 50%. That means you can now basically use the 50% you're borrowing for whatever you want, for free use, so to speak. So, it's no longer just for putting into the house or paying off the house, for example, to buy a Bitcoin. Or if you paid off 60%, then you can borrow against that 60%. If you paid off the whole thing, then you can borrow against the full 100% again. Of course, you have to see what kind of deal you can work out with the bank. He says here that the margin call risk is very, very low with real estate, so it's actually a good option. Interest rates are usually relatively low, and these are actually some of the lowest rates you can get as a regular person. Of course, Michael Saylor gets much lower interest rates. Michael Saylor sometimes doesn't even use loans like this. He uses smarter options. But not everyone has the ability to dilute shares, issue preferred stock, or, issue convertible bonds. That means, for most people, a mortgage loan would be the best option. There's also a Lombard loan, where you use your stock portfolio as collateral, for example, but that's a bit tricky, a bit risky. You could also use your Bitcoin as collateral. That's possible too, and then buy even more Bitcoin.
I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgage. Don't get debt free. Any capital you have that's not mark to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
So he says that you should definitely not quit your job here or close your business here or something like that, and then just act like a Bitcoin guru, where you basically just sell Bitcoin here, leverage it or something like that. You definitely shouldn't do that. But there are a few things you need to keep in mind. For example, that you shouldn't live beyond your means. That means don't buy a sports car that's just throwing money away, don't buy a Ferrari, don't buy a yacht. I mean, Michael Saylor does have a yacht himself, but I mean, Michael Saylor is also a billionaire, and compared to a billion, his yacht is basically like pocket change, like when some people spend a few cents or a few euros. So that's basically how it is in proportion. That means everything always has to be in the right proportion. And he also says, just like I just said, you should definitely not be completely debt-free. That means always leverage your assets, whether it's a business, a property, and so on. It's best to always borrow against them. But you always have to be careful not to overdo it, so you don't get margin calls, and you keep your debt situation healthy. So the question is, what counts as a healthy level of debt? Everyone has to answer that for themselves. Being over-leveraged doesn't help either. There's also the life hack of just using consumer loans as long as you still have your salary. That's also why Michael Saylor doesn't say to quit your job here, because as long as you have an income, you can leverage that income. You can even get a consumer loan based on your income. Sometimes even without having to give a reason, you know. You have to check all of that, and then you can use it to buy Bitcoin. So you have the depreciating fiat money and the appreciating Bitcoin, and you can play them off against each other. That also describes the speculative attack that Michael Saylor is carrying out here, which more and more people are doing. And you can do it at the corporate level, at the individual level, and eventually it will probably happen at the state level too. That's also what a lot of people call the endgame, when states start printing money to buy Bitcoin. Of course, as I said, none of this today was financial advice. That was Michael Saylor's approach, how any average Joe, any random guy, can turn a very small amount of money into 100 times that with Bitcoin. Let me know in the comments below if you can get on board with that, or if you think it's too risky for you. Of course, you have to say, all of this comes with risks and so on. You're also dependent on the bank again, and I totally get it if someone doesn't want to do that or doesn't like it, and so on. Yeah, but on the other hand, not doing it at all might be kind of dumb too. So feel free to let me know in the comments below how you see it. And if you still want to buy Bitcoin for your 100x strategy, not related to 10x DNA, but a 100x strategy from Michael Saylor, then I'll put a link below to 21 Bitcoin, where you can easily and securely buy Bitcoin. Use the code BitcoinHotel to save up to 20% in fees when buying Bitcoin. Absolutely recommended, guys. See you soon. Peace out.